Let's bring in Peter Boockvar for more on what to expect for the Fed and the markets. He's the Chief Investment Officer of Bleakley Financial, a CNBC contributor. So what will you be listening for tomorrow in this speech? Which, by the way, we get in a text. We don't get to see it on camera in Jackson Hole. We just get to see his walk out onto the deck.
Well, because there's no question and answer afterwards, he can be very careful with how he words this. And I think to your point earlier, I don't think he's going to put himself out there. He'll acknowledge that they'll probably cut in September by just saying we're shifting our attention more to the employment side than inflation. That's sort of an endorsement for that September cut. But he's not going to tell you 25 or 50, and he's not even going to tell you what he's going to do after that because there's they don't know. Exactly. I mean, when Powell wakes up every day, he's trying to figure things out just as we are. So the way that the market has priced in a lot of cuts over the next year, that implies a certain economic scenario. And I think the only way you get 200 basis points of cuts is if the economy is really weak, not because inflation is just staying at 2%. So
is the bond market telling us that it's, to Guy's point, weaker than the equity market thinks?
I think it's implying that weakness in the sense of they think the economy is going to need that level of interest rate cuts through next year. But I think tomorrow it can end up being a total non-event. And I agree with you that NVIDIA is more important than what Powell says. And I think we got evidence of that over the last couple of weeks where the economic data actually mattered more for the markets directly, not in terms of its implications for the Fed. And the earnings from the big names had much more of an impact on the markets than the Fed also, as people reassessed this whole AI trade, and NVIDIA will sort of cap that next week.
But my counterpoint to that is that just wait for a jobs report that comes in worse than expected or significantly better than expected, and then it's all going to be about gaming the Fed and whether the market pricing is off.
Well, yeah, that's going to complicate things for sure. But I do think that payroll number, even though we learned that why are we trading off one payroll number if it can be revised 5 times before we get the final number. But yes, that can single-handedly determine whether they cut 25 or 50 in September.
And I misspoke. We will see Powell. He will be live, and we'll of course take that on CNBC.
So I love seeing you interview various leaders around the world of like, what are you going to do? Are you saying that means you'll cut again? So just to your question, though, if we get some data, how wide do you think that swath is between it wasn't great, but it's good enough where they just proceed anyway? How out of bounds does it have to be to change this course that they seem to be on?
I think it's more of the trajectory. It was August 1st where we had the disappointing claims number, and the market sold off. So to me, that was the first signal that the market was focusing more, trading off the data rather than what it means for the Fed. And that was followed the next day by the payroll number that was weak.
Can I counter that, though? In hindsight, it seems to me that yen carry trade was already starting to unwind.
Well, that exaggerated everything.
Exactly.
Yes.
So, right, maybe that as a standalone with no other big unwind, it wouldn't have been as dramatic.
Right. But that Thursday, Friday, we sold off. That was sort of the setup for that Monday.
I'm saying it was already starting to happen.
Yeah, no question. And it started to happen the day that the BOJ raised interest rates. Because while many thought they would hike, it was still 50-50 in terms of market pricing.
So ultimately, I mean, first of all, have we worked through that whole carry trade stuff?
That's the big question. I mean, we were talking earlier.
Guy's going to be up late watching the testimony before the lawmakers at the BOJ.
So it was very difficult to figure out how big the trade was to begin with. So those that are forecasting how much is left, I don't know whether it's true or not. 50%, 75% is what people have said. But just to have that sort of leverage that can get such a violent move, particularly in the Nikkei, was rather astonishing. But yeah, what Ueda says, that trade's either going back on because he says, I'm not going to hike again, or the governmental pressure, as you mentioned, is so intense that he tells the market, hey, I know you had your hissy fit, but I still need to contain inflation, and a weak yen is not good for us, and do expect another hike by the end of the year.